Welcome to Trading Lounge and the Bitcoin report for the 18th of January. So I've been looking at the volume a little bit more, and I've learnt a little bit, but there's still a lot more to learn. In a nutshell, there's about the 10 largest exchanges report the volume quite accurately. The rest of the exchanges tend to overrate their volume, so we need to decipher through that and just use the volume for the main 10, which we will also look at today. But before we go there, this is the CME exchange. Now, each futures contract that they've got, this is a futures contract, of course. So each contract is worth 5 Bitcoins. Okay, so that's worth sort of understanding. There's also the ICE exchange as well. So the ICE exchange has much less turnover. We'll also have a quick look at that as well. When it comes to the COT report from the CME here on Bitcoin, we can have a quick look at that, and also to understand that this is delayed as well. It comes out on a Friday, but it's dated back till Tuesday. But it does give us a bit of an idea of what's sort of happening. We don't have to worry about the dealers here, because the dealers will just be taking the other side to all the sort of non-reportables over this side over here. So the market makers as such. So what we're interested in is the hedge funds and also the institutional guys as well, you know, the pension funds and so on. But these guys are not really changing much as such. So we've got the longs here and we've got the shorts over here. So we can see that they've got their longs here, and they haven't really, well, they've reduced down to they've reduced their shorts. So it's really these guys here. Now, these guys have got 4,000 on the long side and 9,000 on the short side. So they've been quite strong on the shorts. In this whole major trend coming up, they've been building their short positions. So that's really the main point of it all here. So we can see here the dealers we don't really have to worry about, because they're really taking the other side of these guys over here, which are the retailers. The asset, the institutional guys here don't have a lot in it at this stage. There has been 2 pension funds that are moving into the market. I think one of them was reported $100 million, which is, you know, chicken feed off $1 trillion and trillions that they hold. So it's these guys here, the hedge funds, that you know, really pushing the market down, or sort of, I don't even know why we've got futures contracts on the Bitcoin. It's a shame, really, because it gives those hedge funds and others a chance to manipulate the market, you know, like they've done with the gold, so to speak. So here, if we just, we don't need the dealers, we don't need these, we don't need these. So this is really sort of what's going on here. These are obviously the center line through here at the center here. So these guys are long above. They're the institutional guys. They're building their positions slowly, and we should see more of that come in. But in the short term here, it's always the hedge funds against the retailers, squeezing them out in all the futures contracts. And I know that from the index futures, which I was brought up to trade on. So we can see that pressure that's being applied on those short positions in the market. Well, if we look at, let me just roll down here. So this gives you a bit of an idea. The green line here from the leverage guys, the funds, hedge funds here, you can see that they've been increasing their positions all the way through here. So that's their game. They're putting a lot of pressure on that side of it. Just to give you a bit of an idea, yeah, see, this is from Bitwise. 95% of reported Bitcoin volume is fake, and the real volume is much smaller and more orderly and regulated than widely understood. So that's the volume that we're looking at here in the last 24 hours. And these are the sort of the 10 exchanges that have got a bit of trust to them as such. It's funny that Coinbase is, oh yeah, there's Coinbase there. So Coinbase, they've got what they call a bit license from the New York side. So they're actually licensed. Gemini, the Winklevoss brothers, they're also licensed. I think these guys are the ones that helped set up the futures exchange. I find it a bit annoying, really. I don't know if these other guys have got license. Maybe one of these two have got licenses. I'm not sure. But one of the points here is you can see Binance here is really trading the most by a lot in terms of that volume going in there. So I just thought that was sort of interesting. So I need to find somewhere where that's sort of collated a little bit. And this is also the futures volume as well. So you can see how high that is, that's like 4 million, and here we got five there. So, and the CME group here have got this amount, and the ICE futures, ICE futures have got a smaller amount going on here. So I kind of need to understand this relationship. So I mean, I don't fully understand it all just yet, but it's something that we just I will study it and learn it a bit, and then we need to find out where we can collate this a little bit to see it in sort of picture form as such. These are just the futures contracts here. One contract is 5 Bitcoin, and I think the exchanges themselves, those 10 exchanges that we just looked at that have the futures contracts there as well, they would have their own margin requirements as well. So I think that they may differ between each of the exchanges, but also looking at this is Binance here. So I work through Binance anyway, but I'm a hodler. I'm not a trader in this as such. But what I was sort of interested in is the volume as such moving up here. So we can see this is monthly volume here. So we can see in this month here that we had increasing volume, and then we had decreasing volume as these two bars come into play. So this is why we've had the sell-off, because there wasn't enough real buyers coming in here. I mean, for that to move up there is just divergent. So it really means there was no one selling, but also no one decreasing buying there. So it was a perfect storm for those futures contracts to come in, because those guys know they just look at this they just see the numbers coming in on the exchange. They see data that we can't. But I think we can see data now through which I'll be getting more of an account with another company called Glassnode. They seem to have a pretty good grip on that. And the other thing that was interesting as well, I thought that 78%. Well, I'll just read this here. We analyze the Bitcoin entities, classify them into 3 liquidity categories: highly liquid, liquid, and illiquid. So just to cut this short a little bit here, so 78% of this volume here is just really being held at this point. So it's really this red one here, that's the liquidity in the market. So the rest of it's really being held here. And of course, this is a log scale chart here as well. Also wanted to have a look at this log scale in another way as well, this rainbow chart here, which I thought was interesting. And they made a great statement here. The rainbow chart is not investment advice, but past performance is not. The rainbow chart is meant to be just fun and a way of looking at price. So basically, they're saying it works here until it doesn't work anymore, which is pretty much the thing with patterns as well. So I should also say too, for new people, is that I'm in Australia and I do have a financial license, but I'm not giving personal financial advice. So I mean, I hold a license in derivative and equities and yada yada yada, but I'm not giving personal advice. So this is kind of interesting in a way. So we've got this log scale chart coming through here, and I really like this area in here because I think in America you call this is it a cup and saucer or cup and handle or something or other, but it is a really good basing pattern, and it's still got further to go up. So we can see that as it's sort of traveling up from the blue area here up through the yellow into the red area where it gets sort of oversold. So that would kind of leave us up around the 120,000 mark up here. It's got 135,000 up in that red there. So I think that 100 to 100,000 to 130,000 is a nice target area here for this trend that's actually moving up here at the moment. And yeah, and we're likely to see swings coming into this yellow and red area, which we are at the 40,000, and we're sort of breaching this high and so on and so on. And also it's got the halvings here as well for this, so we can see that we've had a halving here and we've pushed off from that, the other halving here, and we've pushed what. So really in the sort of between each halving we've had these tops in the third of that, so we're still pretty much in a strong movement in with all of this. And when I look at this in Elliott wave, that strong move going up through here is part of that third wave. So we've still got plenty to go in all of this. Let me just check else what I've got here for this. Yeah, I'll sign up with Glassnode. I mean, they've got a free account which doesn't give you much, but I'll sign up for account because they seem to have a pretty good grip on the metrics regarding the volume. So this is these exchanges that I was talking about. But when I look at the volume on the futures market for Binance, because I've got an account with these guys, and then compare that to the spot account, there doesn't seem to be much difference in terms of analysing the volume as such. So I thought that was kind of interesting. But when I look at this platform here is just a CFD on Bitcoin. So that's why I wanted to improve the volume on this space as such. I mean, I would normally look at this here and think, well, we've got increasing volume to this point, and then we've got this move that came down here but still closed up higher, so we've got lower volume compared to the previous bar, and we'll see how this month here goes as well. But being on lower volume through here is telling me that it is corrective, and it's just natural to hit a large number and have a correction, and what we want to see in that correction is we do want to see lower volume within that space. But what I want to do now is I want to cut through to the hourly chart where I picked up yesterday, Friday I think it was, so, and pick up where we left off before as such. Well, not quite. I think I'll just go to the 15-minute chart because this is where we looked at before. So we were looking at, just bear with me a second here. So we're looking at this in a couple of different ways here. First of all, my original count was we had wave 3 here with an A and a B and a C for wave 4 here. And then we started to think, well, we could have an A and a B and a C wave up here to the 61.8%. The market pulled up to the 78.6%, which is square root of 61.8%. So this and then we thought, well, we can have this as the A wave, the B wave, and the C wave down through here. So that's still a possibility, and that would be a case if this low was breached at that point there. So we could say that below that low there, we've got a warning signal at that point, and that would take us down into, well, to me, it would take us down below this low here just, and the first support under the 30,000 becomes the 28 there. So I'm kind of hoping that would be nice for that, but I just don't see that sort of happening. And the reason for that is that we've got a 5-wave structure in this space here. But this is where we sort of looked at last week. And the other thing I don't like about this too is that wave 1 and 2 is fine, but then wave 1 here, and we've got wave 2, which is okay, is an ABC pattern, and we've got 5 waves up here. So we've got 5 up here. That means that we'll have some sort of little ABC pattern coming back into the 61.8% or that level there at the 35, and then we'll push up here for another 5. So we'll get that 5. Well, because we've got 5 waves here, you can see 1 and 2 and 3 and 4 and 5. Because we've got 5 waves here, that means we'll pull back to the 50-60% mark, or the closest largest number within that space. So that's all good. So we'll drop that. That's 50 and 60 in here. So if that 35,000 becomes the retested resistance, then you know that we're going to be going lower at that point. The reason I don't like this count of 1 and 2 and 1 and 2 here is because this wave 2 here is so much bigger. This wave 2 is so much bigger than this wave 2, and yet this wave 2 is 1 lesser degree than that one there. So I think that we're in some type of triangle pattern here. So we know that we're in a correction. It's just how's it going to play out? So as I mentioned before, it appears that we've got 5 waves here. So if this comes back down to the 35 here, because we've got 5 waves in the opposite direction of the trend here, that means we get 5 here, we'll get another 5 over here that could take us up to the 38. Number 8's a profit-taking number, so we'll see that struggle at that point. And then we can have another 3 waves here, and then we can move off from that point there as such. So that's my sort of latest thoughts about this, and this is okay as long as that low stays in place. Now sometimes the wave E here in wave 4 here can just drop below this one here. I've seen that before, so I wouldn't panic. But if it happens while we get that 3 waves over here and this is all over here, then that will be okay by that point. But the main takeaway here is that it appears so far that that this reaction from the 40,000, and looking at the volume coming up here on the monthly charts and the weekly charts, we could see that on the futures market and on the spot market with Binance, we could see that this was decreasing volume as the trend was moving up. So that's divergence. So we could expect a correction. So we've got this correction coming. It appears that this correction here is on lower volume than the previous trend. So it's confirming that it is a correction. Wave 4s can get complicated. So, well, a triangle is pretty complicated, I guess. And we could be in the later stages of this. So we'll just see how this plays out. We'll pick this up again on the Wednesday. Now I've got this labeled here as a blue wave 4 and a blue wave 3 up here as a intermediate, but don't worry about that too much. We're just using this to count. I haven't gotten around to changing it into a smaller degree of structure, but it just helps just clearly seeing it like this. So in the bigger picture, if we look at we'll just go back to the daily chart here. So I'm thinking that, as I mentioned before, this is still log scale here by the looks of it. So we've got orange wave 1 and 2 here, then we've got 1 and 2 here, and we haven't gotten to wave 3 here yet here, then we'll go to wave 4. So I'll just go into maybe, I don't know what I've got on the 6-hour chart here. Okay, this is cool. It's a bit better. So let me just clean this up a little bit. We thought we might go straight up there on that based on those things, but that's just not the case. We're going to be going in some other little sideways pattern here. So probably, yeah, we're looking at, well, I won't go into it too much here, but looking into a triangle pattern here with a little bit more to go in here like this. And then we've got this wave 5 up to here. And then we'll have another correction here at the 50, may come back and sit on that, and then we'll head further up at that point. That's the way I'm seeing this. And we'll go over there, and we'll have a fair bit to do at the 50 here as well. In that case, there'll be work to do there. Let me just go to the 4-hour chart, see if I've got any clear at that point. Okay. I mean, me personally, I'd like to see the market drop back down to 28 so we can pick up some more, and it may be the case, but like I mentioned, that this low here, if that gets breached, then we're coming down here further to the 30 to the 28 here, and then pushing up from that point. Okay, but otherwise we'll see some more complicated pattern occur in here before heading higher there. And let's see, so we'll pick it up on the Wednesday and we'll see where we are at that stage. Alrighty, thanks for tuning in. Cheers.